Financial Wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
We were talking about disability and how important it is and how you could have state disability or how you could have employee benefits for your disability. And I'm thinking to myself the whole time, most of my life I've been self-employed. Mm-hmm. And most of my life I had no disability insurance. What would have happened to me as the sole income earner of my household with no disability insurance if something would have happened to me? So I can't think of a better person that needs disability insurance, Don and Scott, than a self-employed individual. Is that available?
Absolutely. It's definitely available as an individual. As a sole business owner, even an employee can get it if it's not offered through their company. But, the only issue that I see that happens, because we work with a lot of self-employed people, is just like you guys, when they're self-employed, they're not showing everything they could show. They're trying to show less. They don't have to pay as much taxes, right?
Right.
Okay.
Sure.
So with disability, you're able to get roughly about 60% of what you show on your tax returns. So that's what you're able to get.
Gross or net?
Gross.
Gross?
Net. I'm sorry.
Oh,
I said the wrong thing.
okay.
Net.
Okay.
Yeah. After expenses, yes.
Uh-oh.
So.
Cut in half, divide by 2.
Right.
Most people qualify for $8 a year.
Yeah.
I look at a lot of tax returns. I got to tell you,
Yeah,
I look at self-employed individuals all the time, and you wonder to yourself, how does this person survive? Yeah.
Right.
But it's still interesting. But not everybody, of course, writes that much off, and some people
Yes.
would better get something than nothing, of course.
And not only that, disability income is tax-free.
So.
Oh, there you go. That helps too.
Well, there you go.
Yeah,
So that's like
there's the
That's why it makes
60%
a
there.
difference,
Yeah.
right. So if you get 60% tax-free, you're basically getting 100% of your income.
Tax-free income, exactly.
Nice. Okay.
Well, since we're talking about self-employed, we're talking about the best Christmas gift they can give their employees.
Yeah, absolutely. I mean, we talked about a little bit before you came on the show is I would love for the self-employed to at least reach out and find out how much employee benefits would cost.
Because there's a lot of benefits to the employer to where it doesn't cost them as much as they think.
There are some benefits. They could deduct all the premiums, but the other benefit, really, why most employers get benefits for their employees, is because that's what employees want. You want to have a good employee. You want them to stick around. That's one of the first questions they ask. What are your benefits? What do you offer? How much is it going to cost me? Do you offer dependent coverage? Dental, vision, etc.
Right.
So it's more than just what the pricing. It's getting good quality people to stay with you.
Yeah.
And I think that's one of the most important things.
That's what's made it for us. It's not how we treat our client, our team. It's that they have benefits.
Exactly. No, but it is an integral part, at least in their interview process, right? When they're first coming on board or considering making a switch, it's important.
Yeah.
It's important, especially in those households where there maybe is one self-employed borrower that's taking a tremendous amount of risk and doesn't have any of those benefits. If the other spouse, even if they don't have a tremendous salary, if they can at least bring the benefits to the household, then that helps tremendously.
Exactly. And there are some, you're right, and there's a lot of plans that are that the employer doesn't have to pay for, the employee can, and also pre-tax them. There's different plans. I'm sure you've heard of them, like Aflac or Colonial Life.
We like Aflac. We have a lot of us have Aflac.
Yeah, there's a lot of
Aflac.
things. You pay for it yourself.
Right.
Comes out your paycheck tax before taxes. It's a great
supplemental insurance.
Supplemental
basically.
insurance.
Yeah.
Hey, Don, by the way,
because I ride motocross.
Oh yeah.
I got supplemental insurance.
Yeah. Hey.
33 broken bones. No problem.
Good news is if you ever lose your job here at Skyline Home Loans, you can be the Aflac duck.
Yeah, that's true.
That was pretty decent.
Thank you.
Right.
Okay, so as we close out, and regarding the benefit, we'll close this out. You can handle the benefits, but you can also handle the HR and the payroll and everything for them. One-stop shop.
One-stop shop. We have a HR and a payroll division that is unbelievable. We have a great team. Our HR division, not only do we have people that we can help you with if you need HR people, but also it's technology-based. Time clock systems, everything that reads into the payroll, so it all works together seamlessly.
I mean, that's huge. I had my own company, and I hired a company to handle it. It was silly. I look back at what I was paying. I'm like, my hourly wage and what I'm supposed to be doing to make money and build our company, and handling HR and payroll was ridiculous. It was absolutely, and it was a headache. My worst nightmare was that time, the couple of times a month where I had to handle all that stuff. Now, I love that, and you can do that for them.
We have a great team.
Take away the
Really good.
headaches in 2016.
Well, that's actually a huge benefit, Scott, and something we haven't talked about before when you've been on. And I mean, just the fact that you don't have to manage, because that's an area that I think most business owners, I think as a business owner, if you're planning for next year, what you really got to look at yourself and say, what am I good at? Right? And most business owners are really not good at HR. It's just not something that we're naturally good at, right? We're entrepreneurs. We like to take risks. We've got big ideas. And then you're like, oh, I got to do payroll.
Yeah, right. That's what top salespeople want to do.
Yeah.
Right. And,
All right. So you can handle that. Again, we're here with Scott Zimmerman with Corporate Strategies, Inc. And you can get to him at corpstrat.com, right? corpstrat.com. And you can find so much information there. I mean, seriously, you go through, and it's a really nice site, by the way. So much information. You write great articles for the Vault magazine. They're really good, dude.
Thank you.
And we love the articles. Again, you can subscribe to the Vault magazine. It's a quarterly magazine, and you can get it by email or mail, and you can basically go to aprgi.com. That's aprgi.com. Great magazine. It's going to educate you and so many others. You can share it with them. I guarantee there's an area that you need some advice in.
Yep, and I know we've covered some of this before with you, Scott, but I'm going to bring up one more because Don asks about it all the time. I think he's just getting old.
Okay.
He's very concerned about long-term care.
Right.
He's every time you come on, he's like, let's talk about long-term care.
You keep this up, Gino, you're going to lose your benefits.
All right, so what's your question?
Well, I mean, here's the thing. I mean, you know, at what point do you start thinking about it? Do you start thinking about it in your 30s, in your 40s, in your 50s? When do you start really thinking about, like, I should do this?
Most people are starting to think about it now in their 40s, early 50s, 60s. Some people wait. And
Okay,
you
I
can.
got the second part
Yeah,
of
you
that.
can. Now, the sooner you get it, the lower the rates are. And also, while you're healthy, you always want to get long-term care insurance while you're healthy, because if you're not healthy, you can't get it. And then it's just not something you can get. But
And it's more expensive than people think, too. You have to handle that.
it
No,
is.
not the insurance, but long-term care.
Yes.
Oh, my gosh. We have some friends that are dealing with it. It's draining their bank accounts or their parents' bank accounts, which
Exactly.
drives them insane because
Yeah.
they're bummed. They're like, wow, I raised all this money. I was actually hoping to either live off of that or at least give it to my kids.
Exactly.
And now it just gets drained like in
Oh,
no
I mean,
time.
the
And now
medical
they have to
system
move
is-
in with the kids.
Terrible
Yeah.
for everybody.
I mean-
average cost, they say, in the state is $6,000 to $8,000 a month for decent care. Now, you don't have to buy it. You know, the government will take care of you as long as you don't have any assets. But if you do have assets, they're going to make you spend all of your money down before they're going to kick in. And when they kick in, it's not at your place that you want to stay at. It's the place that
Bingo.
they want, that the approved facility.
So I think
Those
you
are-
just hit the nail on the head, right?
Yeah.
Two things. One is you don't get a choice of what kind of quality care you get if you're going to depend on the state. And two, and most importantly probably, is that the cost will drain all your assets. So I think you answered my question. It's not whether you're 30 or 40 or 50. It's if you have assets of any type or form, you should probably get long-term care to make sure the government doesn't deplete them before giving you service.
Yes.
Or
I mean,
be a burden on your family. I mean,
That's
it might be tough for them, too. I mean, how they can afford that. All of a sudden you're moving in their home, or they can't take care of you, or they have to leave
Right.
their jobs. There's so many
You're
parameters.
married and you're 60, 70, 80 years old and your spouse needs care. Can you take care of them and lift them and clean them?
We have that conversation with Miles all the time
Yep.
from
Yeah,
Comfort
exactly.
Keepers. He
Yes.
talks about that all the time.
Yeah.
All right, we're going to close out here. Again, thank you for joining us on our holiday special. Hope you had a great Christmas. Looking forward to the New Year's. Thank you for joining us. What?
It's our last show of the year. Did you realize
Oh,
that?
We got one more.
No.
Oh,
it's
that's
done
right.
the second.
That's right.
Done
Last-
deal, man.
All right, so next time we talk to you, it'll be next year,
Yeah.
a year from now, be 2016. So hopefully the goal here is, one, take action. Take action, whether it's, looking at buying a home, take action before rates go up and prices go up, or refinancing, take advantage of the rates if you want to debt consolidate, add on to your home, or look into your insurance. Scott with Corporate Strategy, Scott Zimmerman, how can they get a hold of you, buddy?
Anytime. Scott at corpstrat.com, or our office number is 818-377-7260.
And you can tell he's a nice guy. He's a
He's
really
super
nice
nice.
guy.
He fits that big teddy bear guy.
Yeah, big time. You'll want to give him a big hug. We do. All right, we're going to give you a big hug now, and thank you for being part of our lives. We appreciate being part of yours. You have a wonderful holiday weekend. Be good humans and smile and be happy.
Be
Thanks for
very
joining.
safe on New Year's. Please don't drink and drive.
There you go. Thanks for joining us.
Happy New Year.